at Nomura Financial Advisory joins us now. Hi Prabhat, good to see you in. Are you expecting anything from the RBI governor at all today in terms of any rate action, or do you think it could be a non-event?
No, our house call is that there will be a non-event, no action on this in this policy.
Okay, so in terms of the market move then, what is your house view? Do you think that the uptrend has now resumed itself, or is this a market that will see extremely volatile moves within a narrow trading range?
Well, I think, first of all, we are constructive in the markets, and I think just the rate action, well, if the rates are not cut, maybe some short-term disappointment happen, but I think if you look at the consensus forecast for the rates, even today, for example, the consensus is still talking about a status quo. So that's why I said it will be a non-event. Now, the market per se, I think we are bullish primarily because we think that clearly there is some sort of growth momentum build up because of the public spending that will come through going forward into this year. We are seeing some signs of sort of recovery from the kind of disaster earnings we've had for the last 2 quarters, especially in this quarter. And we think that the macro environment has turned more benign, especially for India, given the fact that crude oil prices have come to a new low. So in general, I think the environment for equities is quite good. And I said if it's coupled with some growth momentum increase, which we expect will happen, that sort of works very well in favor of the markets in India.
Okay. Prabhat, hi, good morning. Good to see you in this morning. I wanted to quiz you a little bit about the bank numbers, especially ICICI Bank, that in fact reported stabilization in its gross NPLs after multiple quarters of volatility. Does that give you enough confidence that maybe ICICI Bank's valuations that it lost in the year will come back and it could possibly be a good buy at current levels?
So we are positive on ICICI Bank, so I sort of that's our official recommendation. And, I would say that we have generally been positive on private banks more, for over a period of time. The fact is that I think what ICICI Bank has said is that, their loan loss provisions will continue to come down overall, which is what is in line with the forecast. I guess market is a bit more skeptical after, the last 2 quarters. So I think it is definitely sort of a relief seeing these numbers, especially given the fact that their competitors were continuing to report pretty decent numbers while they were struggling a bit. We think that, a private banking space, I've said many times, does have a massive advantage given their sort of capital positions, given their underwriting standards demonstration in the last, in this cycle. So clearly, there will be continued sort of opportunity in private banks over the cycle.
Okay, you did mention just a while back that you've seen some sort of a recovery this earnings season. Which are the pockets or stocks where you were positively surprised this time around?
So what we did was we looked at an overall picture first of all, because our essential aim was to look at what is the overall growth trend that is emerging from this earnings season. And we did a dipstick of companies. We took about 40 companies, out of which we took out banks and commodity companies. Commodity companies obviously are suffering from price declines, global price declines in commodity prices. And what we found is that there was that left about 20 to 23 companies, and what we saw was that the sales growth improved from something like 8% to 11% roughly, and this is a first actually uptick in sales growth in the last 6 quarters. Otherwise, the sales growth year on year was coming down all through in the last 1.5 years. That's the first. And secondly, we also saw that sequential momentum of growth in the June quarter was one of the strongest we have seen in the last 3 years. You anecdotally, for example, auto sales are recovering and there is some sort of recovery in some certain other segments and volumes. But clearly, in terms of overall sales numbers, this was the first that we saw. And I think that sort of corroborates our view that there is a gradual recovery which is starting to happen, even though the full extent of this will probably become apparent only when we are 2 quarters out, primarily because of base impacts. But clearly, I think it's quite sort of positive to know that we have sort of arrested the downtrend in sales volume momentum that we're seeing for a very, very long time in the Indian economy.
Okay. Prabhat, one of your top 5 strategy stock picks include HCL Tech. You weren't very disappointed by the numbers yesterday.
Well, I think they have invested in the business, so we sort of think that it is, as long as the sales commentary is strong and they continue to deliver on the top line, we are not that fussed in the short term about the margin picture because, remember that this company has sort of delivered on multiple year basis in terms of what they've said they'll do, and they've continued to beat the even the frontline tech company. They've become a frontline company in that sense. So we think that the sort of explanation of investing in the business we are quite okay with, and the volume growth obviously numbers were not bad at all. So we are continuing to sort of hold that in our topics.
Okay, fair enough. The other sector that you're overweight on is the industrial space, especially stocks like L&T. This time around we haven't seen any great improvement in the numbers. I mean, the profits have fallen, margins have fallen, revenue growth is not much, but still the market continues to remain very hopeful. What do you think could be the positive triggers for L&T going ahead, and which is that quarter where you expect to see the first real recovery?
So I think for engineering stocks, especially one which have some lead times, one has to remember that what you're seeing in terms of numbers is what was actually probably bid for a couple of years ago, or 1 year back, or 3 years back. So what you're seeing in terms of numbers are the projects they must have taken earlier when the system was sort of distress. So these are lag cyclicals, and they tend to reflect the reality of the cycle with the lag, and that is what you're seeing. It happened precisely like that even in the last cycle. Having said that, the fact is that L&T as a company has become much more generalized, far more diverse, has added a lot of capabilities over the years. So it actually is probably the only company in the sense that if you are talking about a broad recovery, not really a sector-specific recovery, then this is the only one that you can sort of look at, because there are companies which are dependent on for example power sector for their top lines, and the companies which are dependent on real estate sector or roads. But as far as L&T is concerned, it's much more generalized. So if you're talking of defense recovery or railways, you don't need to sort of scratch your heads and look at companies which will benefit from a particular sector. So for a broad revival in capex, I think L&T is still one of the best plays, and that is why I think people, investors, continuing to hold the faith. And as I said, what you're seeing is, in terms of results, is something that is a historical issue. These projects must have been taken long ago, and these are now reflecting in earnings. So I think market is taking a forward-looking view on capex plays, especially for a company like L&T, which has very, very decent sort of set of capabilities, and they have continued to enhance it over a period of time.
Prabhat, one of your other top strategy or stock picks include Maruti. It's already run up around 30% on a year-to-date basis. Do you think that maybe the best could be factored in from a valuation standpoint for Maruti, or what would your target price or what would your outlook be from incremental levels for that stock?
Well, I don't sort of determine target prices, first of all. So I mean, the target price is determined by analysts, and I think why we are sort of positive is that we believe that volume recovery will continue to be to underpin the domestic car industry, which has suffered in the last 5 years. And secondly, we believe that obviously the raw material environment and the exchange rate environment is very positive. So margins will continue to remain quite decent, and the profitability will continue to improve going forward. We believe that ROEs will improve, which will essentially underpin a multiple sort of sustenance. So it's basically a compounding play in terms of volume growth and very decent sort of margin outlook.
Okay, by the way, just keep your eye out on the market, because now it's falling quite rapidly. The Sensex is down about more than 130 points. The Bank Nifty is down more than 0.5%. So in the last 10-15 minutes, things have gotten worse. There are some new entrants in the losers list. So Cairn India is down 1.5%, Tata Motors is down 1.5%, Infosys is dragging the market quite a bit. So we'll just take one look at the contribution plate, and something like ITC as well is getting unwound, so that stock as well is down more than 1%. What do you reckon could be the gains that an investor can make by the end of this year or in the next 12 months, Prabhat? And what would your own targets be on the index?
Well, we think that the markets will do well going into next 1 year and 6 months, simply because we are quite positive on the sort of recovery picture in India. So we are sort of and the other, I guess, the point that sort of makes me very positive is that India is standing out in terms of growth estimates or growth picture compared to the rest of the world, where actually if you look at Asian economies, data has gotten worse. So India's relative attractiveness is, I think, increasing over a period of time. The fall in commodity prices, for example, because of the weak China growth essentially, or a stronger dollar, feeds very well into India's macro picture. So we think that you will end up making 15 to 17% returns from the market overall basis.
Okay. Prabhat, you spoke about private banks at length, but how did you read the government's bank recapitalization plan for the next 4 years? And do you think that it could be a game changer in terms of valuations, at least for the smaller PSU banks, and hence maybe you could become positive on a couple of the smaller ones?
So, I mean, clearly it's a very positive step. I've talked about this before, for example, because my view has been that the distress that is talked about public sector banks in a situation where government's finances have improved is something that can be taken care of, and that is precisely what has happened. So I think our belief is that the kind of capitalization they're talking about is adequate, and given the growth environment that the public sector banks are facing, they might not even need the kind of capital that government is talking about. So that actually takes care of a very thorny problem, which essentially has been a big overhang on India macro situation and sort of growth picture that people have talked about. We have a couple of banks in our portfolio from the public sector side. So we still heavily weighted towards private sector banks, and that is largely because of the fact that we believe that long-term growth sort of picture is very positive for private sector banks. So we do have some public sector banks in our portfolio in a long only basket, especially the larger ones, where we think the asset quality still is comparatively superior. Underwriting standards compared to other ones are superior. And what our sort of view is that we would stick with businesses where we see clearly better lending practices and better visibility of earnings growth coming through fundamentally. Yeah, of course this is taken care of, but there'll be dilution at cheap prices. You must remember that from minority perspective, dilution in banks at higher price to book is always far more accretive to minorities than at lower price to book.
Okay, just one final question then before we let you go. I heard you briefly mention about the fall in commodity prices, that the fall in crude that will aid our markets. In fact, today we're seeing, not just today, for the last couple of weeks, we've been seeing a lot of these crude-related companies, paint companies, tire companies, oil marketing companies do really well. Any of the spaces that you're bullish on, where you would advise that some more money can be put in?
We don't cover a lot of that. Obviously, we do cover some of the paint companies, which we are positive on, and that there was there has been volume improvement too in the sector. So I think the fact is that all the downstream manufacturing companies are benefiting significantly from commodity price movements, and that will continue to feed through. You have seen auto companies declare decent results because of lower commodity prices. You have seen tire companies, for example, which you don't track. So I think it's going to be a generalized theme across industry, and one of the reasons that I said Maruti we are positive on is because of the fact that raw material prices are aiding the margin picture quite nicely. So I think it's a generalized positive for all downstream manufacturing, and yeah, that will be my comment, because as I said, we don't cover many of these companies which tend to fall into the mid cap side.